end up breaking the trend, then boom, counter trend is in. We're off to the races. No reason to be long prior to that. If you're holding a short, no reason to cover prior to that as well. The final example I'm going to give, or the final kind of subset of identifying trend, is what I would call holding above a reference price. What is a reference price? This is essentially the unaffected price prior to breaking news or a key catalyst. So it might be the price of a stock at the close before their earnings after hours. It might be, in the case of this AMD, which had breaking news during the day, that 83.50 or so would be the unaffected price. So the way I would look at this chart is, one way of viewing it is, as long as we held above 83.50, that news would be viewed as quote unquote good, and it would be a positive signal. If we get below that 83.50, that would be a sign, maybe this news isn't as good as the market expected, or maybe I'm missing something here. And so doing that, we can start to then build rules that we're later going to do. And so much of this stuff becomes more powerful when these trends are aligning on multiple timeframes. A lot of people discuss the multiple timeframe stuff. I know Brian Shannon discusses it, so many people, because it's important. And the way I like to think about it is, the more people you get on your side, the better. I want the Chris's on my side. I want the Lances. I want the hedge funds. Every time frame, whether it's monthly, weekly, yearly, day traders, swing traders, I want everybody on that trade. And so this Tesla, this is pre-split, the $900 breakout back in October of 21. This was one of those things where this stock made a beautiful, huge move up, went up 6x, made highs at $300. Then we make a higher low. We then make another higher low. We come back to those highs and we break out on an earnings catalyst. This chart is as textbook as you can get, which is why I felt the need to include it. You have weekly breakout, you have a daily breakout, you have an intraday breakout, all with an earnings catalyst. So all of those trends are aligning, and we want to be capturing moves just like this. And then regarding the trailing stop I discussed, if you use even like a weekly chart, you're catching a good chunk of that using the prior bar lows to get you out. And so now, as I alluded to before, there's ways to go with the trend and still be on kind of that counter trend, right? So with this GME on January 28th, this is intraday of 2021, the stock was just melting in huge volatility. So where it gets scary is if you're fading on the downside, right?